In a bid to control rising inflationary pressures from becoming entrenched, monetary policy authorities across the globe are working hard to confront stubbornly high inflation by accelerating monetary policy tightening. This development has made the central banks in US, UK, and eurozone to raise benchmark interest rates to their highest level since just before the financial crisis 15 years ago, as the global economy is going through a sequence of shocks. The resulting swings in activities and prices have presented policymakers with challenges of identifying turning points in their underlying dynamics at a time of disruptions in their economy and the financial sector. Well, let's come back home and talk more about what rates even mean for Nigeria's economy. And I'm being joined via Zoom by the Chief Executive Officer of the CFG Advisory, Mr. Tilewa Adebajo. Mr. Adebajo, thank you so much. It's really good to have you on the program.
Good afternoon.
Yes, I will go very quickly to the move by the central bank now. I think it's about the sixth time that we're increasing MPR, and it stands at 18% at the moment. And inflation is still far above 21, and it's a little bit above 21%. Something seems not to be working. What is your understanding of the continuous increase of rates by the CBN, that's by the Monetary Policy Committee, in addressing inflation? Is that really the way to go, looking at our story in Nigeria?
Thank you very much. Good afternoon again. Well, the problem of inflation in Nigeria is not a new one. The challenge of inflation in Nigeria, as you know, our inflation has traditionally been cost push as opposed to being demand pull inflation. And one of the leading drivers of inflation in Nigeria today is food inflation. As a result of the challenges in the food baskets and the logistics in getting food to the urban centers. But however, there's still another factor that is driving inflation, which we're yet to take a look at. But inflation, even if you take a look at inflation figures at 21.9%, our own basket does not show it reflects the reality. In reality, inflation numbers are closer to 30%. 28.5, 29% than the 21% that we're currently seeing being recorded. So if you take a look at the baskets, transport, food, and all the other usual suspects, you'll find that especially in Lagos, inflation is close to 30%. However, having said that, another challenge we have with inflation, and the reason why the rates are constantly going up, is because of the ways and means financing. As you know, government has like 23.7 trillion of ways and means financing on its books at the central bank that is having challenges financing. And you know that a lot of the CRR, which is the benchmark which the central bank uses to debit commercial banks, right now at about 32.5, is quite high. And a lot of those funds are going in to fund the ways and means financing. So it is the ways and means financing also, and of course, the printing of fund money that is also driving inflation. And as you can see, despite the fact that they have withdrawn quite a significant amount of currency from the circulation, inflation is still on the upwards. So the key driver of inflation now is not just food inflation, but the ways and means financing.
This conversation, but the street. This means that borrowing or lending to customers by banks will be on the high side. What does this mean for our economy?
Well, it's right now with the way the interest rates are, how many companies can do very well, lending at 25, 30%? It's going to be extremely difficult for you to have anybody to borrow at 30% and make a decent return. So at the end of the day, what that means is that GDP growth in the economy is going to slow down significantly. And we're going to have significant challenges with the GDP growth. And that is a very, very important factor for the Nigerian economy. So while higher interest rates are important to stem inflation, the opposite effect is the fact that you're going to stunt growth.
And that is not good for a country that is struggling like Nigeria. Now, the financial sector, some say, will be worse hit with all of this. Even if we look at the effect of the naira scarcity and all that is happening, banks will tell you today that they do more of paying out and they are not receiving more. what is your take with regards of this rate hikes and all of this on our banking sector's integrity?
Well, what tends to happen is that you find a situation whereby, let's not confuse the scarcity of cash with the financial system is very robust. And you will see that from the performance of most of the banks, their balance sheets are very healthy, and most banks are hitting close to ₦1 trillion in revenues now. So the banking system is very healthy and effective. But it is the policies that drive these banking banks that will either be positive towards economic growth or to be detrimental towards economic growth. So, but the advantage is that with the higher interest rates, you're going to encourage savings. So there's an opposite effect to each policy you can see. So what will happen now is that you will encourage savings mobilization. But again, what are the rates of savings? As long as the rates of inflation is higher than the rates of savings, then at the end of the day, your real rates are negative in the economy. So there's a misalignment in the economy today in Nigeria. And you have the fiscal policy in Nigeria has put a lot of pressure on the Nigerian economy today.
So in a situation of business as usual, are we expecting that inflation will continue to be on the high side? And if that continues, what would you advise the MPC, that's the Monetary Policy Committee, how would you advise them to tackle this?
Well, the key driver of inflation, as I've told you, is the ways and means financing. So the ways and means financing needs to stop. The fiscal side is putting too much pressure on the government. The debt profile now is close to $200 billion from about $60 billion about 7 years ago. So the debt profile of Nigeria is currently unsustainable, and it's beginning to impact on the economy. And because of the ways and means financing and the printing, you're putting pressure on inflation. So it's important that we stop this. We need to have some structural reforms, significant structural reforms within the economy. The key being removal of the subsidies. We need to start to look at agencies that we can concession out. We need to take a look at state-owned enterprises we can privatize in order to enable government to bring in significant amount of revenues. When you do that and you remove the subsidy, you're bringing in close to $10 to $15 billion a year extra. And now, understand that we also have a silver lining. In terms of Nigeria, non-oil revenues is actually a larger portion of our revenues than oil. And we have close to 10 trillion in what you call non-oil revenue generation, which include taxes. So if we can improve on this and remove the subsidies, put in some significant structural reforms on the fiscal side, you will begin to see a marked improvement in the buoyancy of government, and government will have more funds available to it. As of now, when you have a situation whereby government is resorting to printing money just to pay salaries and run the government. This approach is not sustainable.
Interesting stuff. Just today, the Minister of Finance is telling us that there's a crude oil export is increasing by about 337 billion. That's about 1.8 trillion naira, according to her. But my question really is, we seem to be doing well in our crude oil production. We hit the 1.6 million barrels that we expected to hit. If we continue this way, maybe more revenue might be coming in for government to run governance. What do you make of that?
Well, the oil revenues have not been reliable. And to be honest with you, Nigeria hit 2.5 million barrels in 1977. So do you understand how long ago that was? That was when we hit 2.5 million barrels. Since then, our oil production has been on the decline. We have been struggling. We've been struggling to even hit 2 million barrels. So we are not making the right investments in the oil sector. For instance, the LNG project brings in significant amount of revenues in terms of dividends and taxes for the government. But there are two more LNG projects, which is the Brass and Olokola LNG projects. We should make that investments. If we can't make it, invite other people to make the investments on behalf of government so that we can increase the revenue to diversify. We have this $8 billion Train 7 investment in LNG, which is positive. but we are not investing enough. So we cannot be celebrating 1.6 million barrels. It's not enough to sustain Nigeria. A lot more needs to be done.
A lot more really needs to be done. As we move on, and we expect by May 29, new administration comes on board. Everyone is setting an agenda. But really, I'm just like, are there any quick wins for Nigeria at this time? We tend to face a lot of challenges at this time. But what do you think are some of the things that really needs to be done if we are to get it right and it's not business as usual?
Well, like I said before, the quick wins are: number one, you stop the ways and means financing. Number two, you implement the structural reforms I talked about. And number three, you remove the subsidy. If you do all those three things simultaneously, you will see a significant turnaround in the fortunes of government. And you can now begin to see some relief, and you can now begin to feel the impact of the economy and then push the economy in a path of growth. But a lot of what you see now are very restricted to the economy. And the fiscal challenges that the government has is impacting the whole economy as a whole. And you can see that the ways and means in itself is driving inflation. That is not positive for growth. Nigeria's GDP currently is about 410 billion US dollars. Nigeria today has a potential of a $1 trillion economy. If we hadn't lost close to 150 billion of our GDP in the last 6-7 years, our GDP should be approaching close to $800 billion now. If we can match an 800 billion or a $1 trillion economy with 8 to 10% growth on a sustained basis, then I think Nigeria can be on a path to recovery, and we can be living to our potential of what Nigeria is. But at 410, 420 billion, that is not what the potential of this country is today.
Well, interestingly, I'll let you go now, but just you talked about subsidy, and I'm going to speak like a normal Nigerian that would ask you, the effects of subsidy removal is something that everyone is worried about. I'm also one of those that would like it removed, but are we not going to prepare for the effects of this when removed, buying fuel for as much as 500 naira? Even some came out to say we'll buy for as much as 750 naira. Some say that's not possible, but definitely we'll buy it for almost double of the amount at the moment. What are we supposed to put some shocks in place?
Well, when you say that, do you know what the subsidy is causing right now? Do you know the damage that the subsidy is causing right now? So when you say you remove the subsidy, what is the effect of that? You are paying the real price for that. We're already paying the real price for diesel. We need to pay the real price for everything. If you cannot pay proper prices for goods and services, you would distort your economy. The intervention you're talking about is very serious. Subsidies, all our oil revenues today are going towards subsidy payment. Who are the beneficiaries of the subsidy? Diesel is not subsidized. So because you are losing $15 billion a year in revenues towards subsidy, you have resorted to ways and means financing. That means you're printing currency. If we continue with the subsidy, our economy will start going the way of Venezuela or the way of Zimbabwe. That is not what the giant of Africa, this sort of economy, deserves. So the harm that the subsidy is causing or has caused to this economy over the last 7 years is significant. So the removal of the subsidy, the gains outweigh the losses. If we are paying real prices for everything in Nigeria, we will sit up in this country. Okay? 500 naira for fuel. Then you plan your trip. You go to Cotonou, that's where the problem is. If you go across the border to Cotonou, they don't have as much money as we do, but they're paying the real price for fuel. Same thing in Ghana. And that is why our fuel is being smuggled across the border. So when we pay the right prices for things, we will sit up in Nigeria so that before you enter your vehicle and go somewhere, you will think about it twice. And, all the effects that you're talking about in terms of the multiplier effects as to how the prices will adjust, then we will settle down to real prices. I've advocated that they should have removed the subsidies gradually over the last 5-6 years, but you haven't done that. So now you have to do the big bang approach, and let's absorb the shock and let's move on so that we can understand what the real economy is. We'll make the adjustments, and then we can grow this economy to a $1 trillion economy and have growth rates of 7 to 10% per year. That will cushion the effect of any subsidy removal, because you will gain from growth. And once you gain from growth, then you're over the hurdle. Unemployment, poverty, and all those things, growing your economy at 7 to 10% a year, all those things will disappear. That is what we need to focus on, not keeping the subsidy in place, which is distorting the prices around the economy. We need to pay real prices for what we're doing. And everybody now needs to tighten their belts and adjust accordingly. Then all of us will all be happier for that.
Well, it's a good way to live it. Mr. Tilewa Adebajo is the Chief Executive Officer at the CFG Advisory. Thank you so much. It's always a pleasure having you on the program.
Thank you very much.